I'm Mortgage Mark. Let's talk about how to qualify for a self-employed loan. So let's be very clear about what a self-employed loan means and what it looks like. First and foremost, self-employed. In the mortgage industry, you are self-employed if you are considered an owner of 25% or more of a company. So I've had somebody say, well, I'm not self-employed. I'm a W-2 salary guy. Okay, but that doesn't mean you're not self-employed. If you have ownership in the company, 25% or more, you're considered self-employed. And by the way, let's say you're a contractor, 1099. Hey, I'm contracted with this company. You're self-employed. So if you're a contractor, and by the way, one last thing, even someone like myself, I'm a W-2 guy, but the reality is I don't get a salary. I'm all commission. So even I could be falling under the guidelines of the self-employed, where they're going to want to see some of the things will overlap for this. So understand that just because you don't think you're self-employed doesn't mean the mortgage world won't treat you like it. So self-employed programs. There are programs like generic, call it Fannie Mae, Freddie Mac, Ginnie Mae, which is FHA, VA. They all allow self-employed. Now I'm going to say no self-employed folks. You just got to have paperwork. There are then specific programs that don't fall under any of those categories I just mentioned that are then specific to self-employed folks. So let's kind of talk big picture as far as like the normal stuff, right? The Fannie, Freddie, FHA, VA, USDA. Typically, not always, but typically a self-employed person is going to need 2 years of tax returns, and depending on the time of year, probably an year-to-date P&L, profit and loss statement. You're thinking, oh man, I don't have a P&L. That's okay. I'll make a whole nother section. There'll be a link down below about P&Ls that goes into more what that means, because you don't get anxiety over it. It's just we need something, but it's not that big a deal. But I'd say generically speaking, you need to have been self-employed for about 2 years or longer and have tax returns to validate that income. That's kind of the generic. Now guys, truthfully, there are programs like the Fannie Mae, Freddie Mac, things like that, where if you're longer than 5 years, if your pay structure is consistent, depending on what you're doing for the down payment, they may not need those tax returns. So understand that I'm just kind of telling you generically, you're going to plan on 2 years tax returns, and that's both personal and business, and that's all businesses. So you're saying, well, I have one business, that's my big one, and then it's fees down to 7 companies. Cool. We need all 8. We need the mothership and the other 7. It stinks. It's a lot of work. I know that. So now that you know we need 2 years plus year to date, P&L, now let's talk about the self-employed programs. There are programs designed specifically for the self-employed individual. There are some programs that require 12-month business bank statements. They say, look, we know that you guys write a ton of stuff off. You may make $100,000 and have $80,000 of write-offs. We know that sometimes those write-offs may or may not be aggressive, and we can use our programs that'll say, let's just use the $100,000 deposit, and that's what you go for. The trade-off, higher rate, probably bigger down payment needed, credit probably needs to be a little better. Those are some of the trade-offs, but those programs do exist, and they can do it with 12 months, they can do it with 24 months of bank statements. The more bank statements you give, the better. So those are the bank statement programs. There are programs that like for investment properties, you don't have to give anything. You don't have to give employment. You don't have to give income. You don't have to give anything. It's wild. For those investment properties, they're like commercial loans where they treat it based more off the rent that you can get from the home, not so much the actual person, but does the property support itself? So that's one. You may have heard DSCR. I'll put links down below to that as well. But in general, guys and gals, self-employed folks, if you think you're self-employed, if your income's inconsistent, if you're contract, if you're newly self-employed, I'm not saying there aren't programs out there for you. I'm just saying they're going to be different. So myself, I've had been in the business since 2003. So that's a long time. I got great and wonderful people that know how to do this really, really, really well. So I would say the biggest thing I can tell you is up front, get organized, get your paperwork, show as much as you can. Let us, the mortgage professionals, let us help you discern which one's going to be best, because the more you show, the better your financing terms. The less you want to give us, the higher the rate, the bigger the down payment, bigger requirements. So we're happy to help, but those are some of the things you guys just need to think about. I'm not saying don't call us if you don't have 2 years self-employment. I'm just saying that's kind of the norm. Give us a shout. Let's get a plan. We'll help you put it together, and we'll take really good care of you. And just remember, guys, if you need help, reach out to us. If you haven't seen us already at mortgagemark.com, please go there. And if you need help, reach out to us. And when you think mortgage, think Mark.